Good morning, good afternoon, and good evening, ladies and gentlemen, wherever you are in the world. Welcome back to the Caring Economy with me, your host, Toby Usnik. We're now in our 18th season, and today I'm really happy to have as our guest R. Adam Smith. He's a renowned expert in private company finance, family offices, and strategy. And Adam's also the founder, creator, and lead host on the family business Autocast, which is a platform that he has quickly made one of the leading global thought leadership channels covering family enterprise industries. Within his career spanning over 3 decades, Adam has been involved in billions of dollars worth of transactions, and he has served as an investor, advisor, and a financier to over 50 ventures and private equity-backed companies, which we know sometimes these kinds of deals get bad reputations, but Adam is, I'm happy to say, one of the good guys, and we'll talk a bit about that today. So Adam, welcome to the show. We're excited to have you here and to dive into your extensive background, hear about the podcast, and just talk about life's journey. But first, I'm going to open by saying belated happy birthday because I know yesterday was your birthday, my friend.
It was, thank you. I'm celebrating my one day, and you're celebrating your 18th season, so not bad.
We always open by asking our guests to give us a sort of 2 or 3 minute digest of their lives, how they were raised, where they were raised, maybe where they had mentors, pivots, bumps. How did you get where you got? Because we know nobody got where they got by themselves.
So true. Yeah, the journey is very colorful with ups and downs and mentors and pivots for sure. The definition of career also has been changing a lot, I think, in our society, what it means to have one thing versus multiple things and so on. I think it's an interesting time professionally, especially in the family office and investing market. I did start in investment banking, as you know, so I started on Wall Street, was fortunate enough to get an offer from Salomon Brothers, which was quite legendary at the time and still is in the early 90s. So that was quite a intensive Wall Street era when things were done old school. So for there, I definitely had some mentors, still friends with them, and learned a great deal from just 2 years. Wanted to go into the buy side. So once I caught up on some sleep, I found an interesting role to launch a hedge fund in 96, which is pretty early on. Again, worked with some amazing mentors and owners of that firm from Merrill Lynch. Again, old school heads of the whole emerging markets program, and had my eyes set on business school. Business school is still useful, despite the recent news of the slow dilution of the business school brands. But I think it's very powerful, and it certainly has provided me amazing network and learning and friendships and leadership at Post, et cetera. At Columbia Business School, I actually deferred that entry for a year for that role previously. Of course, was in New York, met my then wife, and lived in New York, went into private equity, which was quite a accelerating and very more nascent industry, if you will, for business schools in the early to mid 90s. So fortunate to go into private equity there and really been in private equity off and on since then. I was at $2 billion funds, fairly traditional role, buyouts, roll-ups, consolidations, hunting deals and closing, a couple deals a year. But I worked for two, again, as you were saying, two amazing firms with mentors. Castle Harlan, which was founded by John Castle, was the CEO of DLJ, legendary. That's his family's moved into a family office now in terms of transition, and Castle Harlan stays as a smaller part of itself, which is a trend we see in sort of some mid-sized private equity firms. And then Leonard Harlan, a real estate legend, again, a small family office with his family. Moved into Caxton, which was founded by Bruce Kovner. Did not have the privilege of working with him as such an elite person, but we had a fantastic private equity arm called Caxton Eisman Capital. And then after a couple of years, I had an itch to do some things on my own. So I started doing my own deals when I was 29. Did about almost 15 directs, $15 billion of total capital, sold those, wound those down, restructured, merged, liquidated, made some money. And then I moved into venture and then family office merchant banking. I've also been recently helping to relaunch a famous finance brand. And then I've also been launching a single family office. And so today you find me, I have several family office clients and I help them on a range of matters. And then, as you said, I started a podcast as a hobby. It's more than a hobby because it takes tender loving care. So now we're on our 42nd episode. That keeps me busy as well. So it's been a colorful journey, as you said, recognizing those select people that you learn a lot from, and then staying connected with them also is really, really important.
Yeah, agreed. You've also been on mission the whole time. You've charted out a career largely in, I'll say, finance, and you stuck with it and grew as the times changed. But before that, I want to just understand when you were like a 10-year-old boy, most young kids would say, I want to be a policeman or a doctor. So I'm just curious how you
Yeah.
got into that sort of career.
Actually, getting the first job was a journey because I was not in the Ivy League. I was in the sub Ivies at Boston University. And I think the privileges afforded to you outside of the Ivies and League schools, they do go down a notch and it requires a bit scrappier
Mm,
behavior and networking. So I did actually get the job at Solomon Brothers, but partly because I found a way to optimize my applications that was beyond the liberal arts career center, which was not cutting it. I'm sure it is today at BU. But at the time, I had to find a back door, and I applied to 50 investment banking and investment management firms and flew extensively from Boston to New York. Quickly earned medallion miles, which was super easy to do back then. It felt very important. Um,
perseverance.
Perseverance. So
True.
uh, at the time, it was interesting. I was talking to Bear Stearns, Kidder, Peabody, and Salomon Brothers, and Kidder actually was quite powerful at the time before the blow up. As many of these firms do have their kinks, so actually getting it was quite challenging. But when I was younger, I was very proactive, like an entrepreneurial kid, I guess, in terms of creating little businesses. I would sell things. I would do lawn mowing in the neighborhood, make some money, and come up with concepts. I started as a pneumaticist when I was about six, and I think I still have most of that collection. And I counted when I finished high school. I counted that the collection was worth $6,000 in 1989 years. And at the same time, my dad was on Wall Street, so I was inspired by him
There you go.
and Morgan Stanley. So I think moving around, traveling, seeing the world, looking at the way things work, being inspired by a parent that's in a particular industry, and then checking the Wall Street Journal, looking at all the movement extensive information at the time, static and paper. When I was 15, 16, I had $1,000 to trade.
Wow.
Obviously, was not caring about the commissions. I didn't know there was commissions, but I was given $1,000 to trade stocks. So just one short story. I remember driving with my dad out to probably was Shelter Island where we still have a house, and we had invested in a trucking company called Yellow Freight. And I remember, I think maybe I was 14, and we were driving on the highway, and I remember seeing a Yellow Freight truck, and I was so excited. And I said, "We own like
There you
we own a part of the truck." And so my dad drove up to
go.
the trucker, and like in the old days, you would
Yeah, you
actually
make a honk.
do
Yeah.
this thing. He rolled his window, and I'm like, "We own part of your company." And I did this, and he did the horn. I thought that was really cool.
Yeah, you could show up at the shareholder meeting as well. I love your story about, being entrepreneurial as a kid and mowing lawns, as did I. I'd be curious on your reflections because you're a parent as well. But I often give unsolicited advice to my friends who have kids who are trying to find their way. And I say the most important thing you can do is have them get a job waiting tables, catering, mowing lawns, babysitting, because they will learn to interact with other people. It can't be digital all the time. They'll learn to serve, they'll learn to think fast, be diplomatic, do math. So I want to get your thoughts on that. Has it been your observation that the successful people in your life are sort of similarly oriented?
Yes, I also my first job was in a restaurant, a deli, as was my son's in a restaurant actually in New York. So I think that's a good example of on the ground tactical training combined with human behavior and like psychology and sociology of interaction with people. I think that would become actually the soft skills is a whole other topic, but the soft skills are becoming cannibalized and diluted, I think, by society
Mhm.
slowly or not so slowly by social media and AI. So the soft skills start way back, and that's very relevant in the family office
Yes.
business and the family office world and the larger billionaire and the bigger companies that have families. It's to get those kids involved early in work within the family business or not.
Yeah.
Just had this conversation last week with a fascinating gentleman, Octavian Graf Palati, 10th generation Austrian, back to 1,000 years old. And he just launched his business this week, actually, called the Anti-Fragile Family. So he emphasized the importance of getting your feet wet and your hands dirty into a business that's very tangible. And I think that as AI and venture and sort of COVID, post-COVID work from home, I think it's going to be hard to replicate the hands-on experience that we had in our Gen X.
Mm.
I think the Gen Zs are coming back around to the values of Gen X. The millennials kind of get a bad rap because they went digital, but the importance of people interaction is super important. And I think one of the ways to do that, as you said, is get some scrappy, interesting jobs
Mhm.
at a gallery, at a restaurant, or start a little company. Also, entrepreneurship can be interesting for the youth now. You know, you have an idea, go to GoDaddy, you go to Squarespace or Wix,
Yeah.
you do a trademark, you give you $1,000 and you start a concept or code, and then you have a business. So that is a way to interact. Also, I encourage
Yeah.
parents to softly encourage their kids to do startups and concepts.
Absolutely. You have really been on mission from what you've shared in terms of your sort of career trajectory and upbringing. So I don't think of you so much as someone who's pivoted along the way, but almost like Sally, sort of tacking as you stay on mission as the times change. So I want to ask you, given your vast knowledge and experience, can you kind of give a general overview about how the business of finance and investing and all this stuff has evolved? You know, people hear VC, private equity, stockbrokers, and now private equity and all the family offices. It feels to me like you've always been able to stay on mission while also evolving with the times. When I was finishing college, I think guys want to become like stockbrokers or bond traders, and that's not even something that people have anymore. And then so
Right.
can you kind of give us a general sort of sense of where the action is in your view, or what you've seen since your Solomon days, the evolution?
Sure. I mean, I think the 80s, my father's generation was very scrappy, tactical, pushing boundaries, creating new businesses, and finding margin, finding like the incremental margin in something that's somewhat innovative. But ultimately, it's either like a transaction or a client business. And capital markets was a huge business that was very one-on-one, very tactical, very trade-driven. Investment banking and money management, asset management, credit cards, those are fairly still similar businesses. But certainly investment banking has transformed dramatically into a bigger business, into more complexity, AI, client coverage, specialization of industries, super important. That same theme has become super important in private equity, venture capital, real estate, a little bit less so,
Mhm.
infrastructure. The specialization factor is super important. I think that really kicked into gear the last 10 to 15 years, driven by the search for alpha as
Right.
opposed to the search for beta in the markets. And the efficient frontier and the power of institutional investors in public trading, and then let's say the marginalization of opportunity in the private markets is also tricky for your average private investor. That competition, that imperfect knowledge floating to the big boys, like I think that forced the creation and the importance of, let's say, fund of funds. They get a bad rap because of their extra fees and they're kind of boring in a passive product, but they're super important for a lot of limited partners and investors in fund of funds. I think it's a very important product for diversification
Mhm.
within alternatives. So that's important. There's the whole LP-GP relationship that's changed a great deal, especially the last 5 years. So there's like interval funds where GPs don't want to create massive funds. They want to do interval funds, extra
Mhm.
work, but the back office is getting easier. And then there's a secondary market, which is now huge, exploding because the J curve and liquidity is backed up. So secondaries wasn't really around much.
It's
I think
always changing. Yeah.
I think that for the youth, it's exciting because you can say, oh, I kind of like the idea of being an asset manager. I want to be in alternatives, but I want to be in the fund of funds business. Or I kind of like secondaries because I want to find the distressed or value assets within the asset class, but I'm not sure I want to really be in a single fund and just be
Yeah.
pigeonholed. So lots of interesting changes. And then
But
finally,
definitely stay nimble is what I'm hearing you say.
nimble, yeah. And then wealth management, like that's changed a lot.
Yeah.
Whereas asset management was the card of the day. Now it's wealth management, closed architecture, moving to open architecture, so the client can have access to whatever they want. Now the margins might be lower, but again, I think wealth management will continue to be fragmented, but also move into a client-centered model driven by single-family offices. So it has changed a lot, but it's also the same. So Things change, but they stay the same.
Yeah, the moral compass hopefully still points one. Ladies and gentlemen, today on the Caring Economy, we have as our guest my friend R. Adam Smith. He's a renowned expert on private equity, finance, family offices, and strategy. He's also the founder and host of the Family Business Audiocast, which we're going to talk about in a second. Adam, I want to focus a little bit on family office because you carved out a nice niche there. And the values piece, I think, is something that you hold dear and I do. You talked about that 10th generation Austrian client. Do you have any reflections on the greatest wealth transfer in history and how the values are getting transferred? If not, like, where are we in sort of your pulse taking?
It feels like we're in this third inning, maybe the fourth inning, baseball terms. People are still trying to figure out how big it is. Where is that liquidity going to go? How will it actually involve the family ecosystem and the children or not? How will it involve the human capital equation of, as we talk about often on the audiocast, the main operating company, the main asset will be held within the family or not? And that drives planning, legacy, emotional connection, pride, ego, not just wealth. And then there's the human capital issue of, okay, is it actually worth the hassle and the stress and the risk of the next gen management
Mhm.
with or without the family owners? That's a big one. There's a massive executive recruiting human capital effort there. There's a massive psychological, socioeconomic, cultural driver there.
Mhm.
There's also the millennial Gen Z perspective on work. What is work? What is the purpose of work? What is the importance of money versus as a hard asset versus what is the importance of the soft asset, i.e., lifestyle,
Mhm.
impact, legacy, work ethic, and then back to the first point, which is, do I want to do one thing? And if you work for a billionaire family, you're probably going to be doing one thing unless they're enlightened, and so therefore it can be quite binary. I'm talking particularly about young adults in like mid 20s to mid 30s, tricky
Mhm.
time for them. But in the end, as I talk about on the audiocast and with experts in the world, there is this big theme of legacy, which is really what I go back to and often talk about it on your show, is like it's important, but it's also, in a sense, what is the why? Why is it important? And how is it different for each person? So I
Yeah.
think that's the big open question of looking out at legacy, like building and selling a company, creating a huge philanthropic effort, like Melinda Gates and so on, and Scott, like 19 billion she's given away in 5 years. It's the we were talking about the other day on another podcast with CSC Financial. She's given away the equivalent of the GDP of Jamaica. So these are
That
big
was.
numbers,
Yeah.
and I think the young adults, like the next generation, they say, well, I'm okay if I make $200,000 instead of $400,000, and I can do that in philanthropy, or I can do it in impact, or I can do a couple startups. So the nature of work, I think, is changing.
Yeah.
And it gets back to this question you're asking of like the big wealth transfer is going to be a little messy in the next 10 years, I think, because there's no precedent for it. And there's a lot of different opinions out there.
Yeah. Adam, if people want to get in touch with you, what's the best way? And then we'll jump into the podcast.
LinkedIn is the best way, generally speaking, giving a big shout out to LinkedIn. Um, we won't go into the quirks and limitations of LinkedIn on this show, but certainly it's not nothing is perfect. I'm a big fan and a very grateful for it as a service, but also with my relationships at the company, affording me early looks at their assets and opportunities. One of the first small group in the world to get access to their first audiocast that's then merged into LinkedIn Live January 1st, which is fine. That's kind of their Zoom internal Zoom format, and it was one of the first with a newsletter. Now we have that. I've been voted top voice 3 times in different categories. Hopefully, we'll be top voice in the world at some point if I'm fortunate enough. That one will stick. Still, when you have a big network in LinkedIn, as I have a built on purposely and also organically, it is somewhat cumbersome because you have to stay on it as an ongoing thing and be polite and respond and
Mhm.
so on. So I'm actually capped at 30,000 connections. You're also have a lot of
Mhm.
connections, and someday they'll let that go. But it does limit the amount of
Yeah.
connections. But I'm definitely there, and I can also be reached at adam-smith.com. But it'd be great to speak with any of their community in the family office market, family enterprises, family firms, culture, governance, legacy, next gen, of course. So thank you for asking.
Yeah, yeah. I'm like you. I'm also capped on LinkedIn, but I continue to edit because, as we've said, you got to stay nimble. So tell us about the audiocast. So it's Family Business Audiocast. Where can people listen to it? And you've had such a great lineup of guests, but maybe tell us a little bit about where to get it, what the genesis was, and why you did it.
I think I did it because I could and I wanted to. And I felt there was a white space. So it was really that simple as a hobby. A year and a half ago, got the name. It covers family business and entrepreneurs, family offices. So that's all good. It's a big business and it's growing. And there's a lot of different opinions. So I wanted to build something that's more Switzerland. So neutral, balance, covering the content, like the intellectual side, the academic side, the deal maker, and actual tactical side. So we have a wide range of content with experts that cover those roles every 2 weeks as a podcast. For us, it goes out on 8 different platforms or so, including my holding company website, which is adam-smith.com. But I think it overall, the question is, why do something? Is because you're passionate about it and you have a voice and you want to create a way for thought leadership, which goes both directions. For me, having a live show forces one to be prepared, to be thoughtful, to learn the person you're talking
Yeah.
to, and get something out of it, and give them a voice for what's unique about them. And then at the same time, it gives me a chance to curate and control the thought and communication process of the topic with a person, with a theme, and curate that and make it super professional as a long-term asset out there. So there is that thought leadership. As I posted this week, one of my go-tos and admire the most in the world from a publishing perspective is still the Harvard Business Review at HBR. And I think that part of what I'm building is borrowing from that like effective, pithy, topic-driven professional content they produce. We see that at McKinsey. We see it at journals, of course, Wall Street Journal, New York Times, et cetera, The Economist. But I think HBR is a great a halo to look at in terms of publishing content. And that was my idea. And now it's expanded into, we have a small team where we have the podcast go through LinkedIn into the world later. So we have 40 or so plus episodes. We'll have 100 by the end of the year. That's the Family Business Audiocast. So anybody who wants to listen, it's either on LinkedIn or it can be on Spotify and Apple. And then we have launched over 50 newsletters, and that is on the Family Business Chronicle. That's a sister platform. We just relaunched that. And then now we're moving into some thought leadership joint ventures and white papers. So it'll continue to grow, really focus on the enterprise. The industry is so vast in the family business that there are different terminologies going on. The family office as an organizational structure, the family business is sort of the business that the family owns. Then there's the enterprise, which I like to use the word enterprise. One of the top experts in the world, friend of mine, guest Alfredo Damascus, he uses a cool word called galaxy. I love that word, family galaxy. So there's different terminologies, but basically I like to look at the whole ecosystem holistically instead of pigeonholing into one thing.
Cool. Yeah, universal, and anticipates putting people on the moon probably. Given what you're sort of gleaning from the podcast and your vast and wonderful experience in the career journey, any sort of crystal ball ideas about what might be coming in the next 5, 10 years, from crypto to deregulation to fill in the blank?
Let's go back to legacy. I think, we have to give a shout out to the next gens. We have to look at not just the billionaires that have the challenge of their children, but also like all the $100 million companies, all the $10 million companies, all the $200 million companies. Family businesses are probably 75% of the world economy. They're pushing 85% of the market cap of emerging market stock exchanges, family owned businesses. They can still be public, but they're still owned by the family. Walmart, is still controlled. At least you can look at the board. IKEA, LVMH, Hermes, these are big companies. Merging and, consolidation and sort of morphing of public and private markets is a huge thing, driven by several factors. First, IPOs are hard, bars are higher, fiduciary risk is higher, investors are not as forgiving. So therefore, with less IPOs and more going privates and more private equity money and more family office money, 5 trillion ish in private equity, 5 trillion ish in family offices. These are big numbers.
Big.
Um, they do not increasingly do not want, my opinion, want their companies to have to go public. Therefore, what do? You sell strategic, you consolidate, you create a bigger company. Look at BDT, what they're doing. Look at the Pritzker family. Look at big private holding companies. Look at the Berkshire Hathaway model. I think there's going to be that consolidation of the private markets going on, moving away from the public markets, number one. I think number two, the legacy issue for the next gen will force, like especially in the next 10 years, a major shift in the way family enterprises are managed with regards to human capital, culture, and giving their children opportunities to do new things. So, for example, let's say increasingly a 30-year-old does not want to run the family business. Well, he or she could still be very talented. Maybe the parents, maybe the G1 or the owners, maybe they should not feel obligated to sell the company just because their children can't run it. They could still support their children in a new business venture within the company. And they could look at their legacy differently, that their legacy is not related to their children, but it's related to the company. I think that's going to be a big theme. And I think it's important to think about.
You could also engage the younger generation in establishing the solution. For example, bringing in professional staff to run the business, the family enterprise. And I also would note this week they announced the private equity is going to buy Walgreens. So we're also seeing that migration of public companies going private, and that's probably going to grow as well. So all the more reason again to stay nimble. I always ask my guests for sort of a final word on pearls of wisdom that they've gleaned throughout their career, their life. Any mantra-like things that you say, or you maybe hear your dad's messages coming out of your mouth sometime all these years later.
Lots to choose from. I think integrity is really important. Integrity to yourself, to be passionate, be committed to what you're doing, give it your best. You might only get one shot, and be prepared, read up, be diligent, be passionate. Better to be overinvested in something than underinvested. So the integrity of work ethic and focus internally, and I think that integrity externally of being open to working with people, always be as direct as possible, be rude, nice, like be efficient, but be kind and have empathy and have emotional intelligence. Back to our comment before, like having, I think, integrity with other people is also respecting their opinions and having that emotional, like, pliability. So for the younger generation, I think it's super important to get out there, as you were saying, in person. So it can be jobs, it can be friend groups, it can be social groups, it can be starting a club. I can see these values being shifting in terms of how communication works between humans in the workplace. For the 20-year-olds, there's more distance, it's more subtle, it's more transactional. So I think as parents and then as companies, we have to really support and coach them and give them tools to be involved, particularly in family businesses, as we're talking about at the table. So there's, like, let's say, the integrity of communication as opposed to like transactional communication. That's a challenge. I think that's super important to think about. And so I've the mentors that I've had, I think, have taught me to be prepared. Always be prepared with who you're meeting with, who you're talking to. Be attentive, be mindful, and then a corollary to that is, especially in elite business circles, and being mindful and empathetic and sort of aware, is to read the room. I think that maybe there's not enough of this going on in business schools because it's more of a softer skill that is part psychological, it's part communication, it's part emotional intelligence, really reading the room, not just being prepared, but actually training yourself to understand who you're talking to and their body language and interact within that context in the moment. I've learned a lot from others, reading about that as well. Can be John Maxwell, can be Tony Robbins, Dale Carnegie, just, there are lots of things to read. But then also, after the interactions, there's the follow up. So again, the youth today may not be as used to following up as much, I think, because there's more interaction in social media context, and they really do not enjoy email. And unfortunately, I think there's a gap there that we still rely upon email as a essential form of communication with an ongoing dialogue, and that interaction is not able to be completely replicated within a Slack or Notion environment yet. So I think that the youth, particularly, let's say up to 25 years old, I think that particular item in terms of communication within the team, within a hybrid workspace, is going to be tricky, and there are generational perspectives that come into play there. So to wrap that up, I would say, just in general, to be mindful, think about the way that others are interacting. One CEO might want to be on Slack, another on Telegram, another on Discord, another on WhatsApp or on Notion, or just on email or just on calls. Like, it's really complicated. So there's not a course for this, unfortunately. So I'm really speaking more to those 20-year-olds about this topic and our ability to give them insights and a heads up on this tricky element of the workplace.
Adam Smith, thank you so much for joining us today on The Caring Economy. Our Adam Smith is a renowned expert in private company finance, family offices, and strategy, but he's also the founder, creator, and lead host on the Family Business Audiocast. So I would encourage all of our audience to check out his audience and his audiocasts. And Adam, I wish you great continued success and look forward to having you back on The Caring Economy to see where we go with crypto and wealth transfer and everything else.
Thank you. Great job, Toby, on this. It's a really pleasure today. Thank you so much.
Pleasure.